Hello bro, and welcome back to the new stock evaluation video. Today we are going to analyze GameStop Corporation with the stock ticker GME. And the reason why we will analyze it is because it's actually one of the hottest stocks right now on the stock market. Even Andrew Tate is buying it and recommending it to buy. So bro, without further ado, let's take a look at it together. Let's see whether we should buy or sell it, okay? And bro, in the previous video when I analyzed Altria Group, I saw that the videos that I do for stocks are completely nerdy, so I decided to redo the whole model, and here are the most important topics that we will analyze, okay? Because I know that as a beginner, you care about only chart, profit, debt, money, value, and price, and so on and so on. So here are the things that we will analyze, basically chart, profit, debt, money on the bank account, value, and price, okay? So now let's start with the chart. Here you can see the chart for GME. It's basically going first a bit down, and then slowly up, okay? But we want to see that the chart grows for all 10 years, okay? What does that mean? We want the chart to be kinda like this, you know, slowly going upwards, having that nice trend up. But here you can see, bro, that the chart is a bit chaotic, you know? First it goes down, then it goes up, down, and then up again, okay? That's a very bad sign to see, you know, because preferably, you know, we want to see this upward trend, okay? Of course, the chart can go a bit up and then down, down a bit, up, and so on, kind of like this, you know. So we want to see this growth, you know, basically trend up. But here, bro, let me delete all of this right now. Here you can see that it's a bit chaotic, you know, because it goes down and then massively up and then kind of down again and then up again. So now that's very inconsistent. We cannot evaluate the company only based on that because it has those sudden shocks, you know what I mean? So now we go to profit. Profit basically means money coming in minus the costs, okay? So here, money coming inside, and then here, bro, we have the costs out, okay? And we want to evaluate the money here inside the company. And we want to see that the profit is in plus and it also grows. Wait, let me delete that. You see here plus and grows. So let's take a look at here. So here money was in plus and then here in minus. Okay, so here they are not making any profit whatsoever. So that's immediately a bad sign. So here we don't want to see that. So profit is in minus. It's that simple. Now we come to debt. We want to see debt as low as possible, you know. And here you can see that the debt is actually going down. So that's a very good sign to see. So this is a nice thing to see, okay? Now we come to money. Money, basically what I mean here is to have money on the bank account. And they have to have more money than they have costs, okay? And here you can see that they have minus $238 million. So they have more costs, because they have less money on their bank account. So that's a no-go for sure, okay? Now we come to the value. The stock has to be undervalued. What does that mean? P/E, this is one thing that we analyze, has to be lower than 15 and intrinsic value has to be higher than the price, okay? So P/E is right now 346, which is much higher than 15. So we don't want to see that. And intrinsic value is actually a fair value, okay? What does that mean? Fair value means that this here right now, those $7, should be the price of GameStop right now. But the current price is $28. So this price right now here is higher than intrinsic value or fair price, okay? So that's also a no-go, okay? Because this right now here, those $7, wait, let me take another pen. Those $7 right now here should be the price. This should be the price. The stock should be $7 and not 28, okay? And now we come to the price. Okay, price is 28. So preferably we want to see it lower than 150. So that's okay, because 150 is obviously higher than 28. So now we come to the final evaluation based on that, okay? So let's take a look. Chart, is it growing? Let's see how the chart is. yeah, it's first going a bit down, then up, down, up. So it's very inconsistent, bro. So we don't want to see that, okay? This is a no-go. Profit, let's take a look. Profit, do they have profit? No, they don't, because here they have it in minus, as you can see on the graph. So we go down again. Nah, they don't. Debt, let's see if the debt is low. Yeah, it's going slow, it's lower and lower, so that's a good sign. So we will mark here debt as a yes. Money, so do they have money on their bank account? Obviously not, because they have minus $238 million. So nope, money no. Value, is it undervalued? No, because the fair price should be 7, but the stock currently has 28. So it is actually overvalued because it's above the fair price. So that's a bad sign. And price, is it above 150? I mean below 150? Yes, it is. So that's another good sign, okay? So my final thought, bro, my final evaluation would be to sell this company. Why? Because as you can see right now here, the chart is inconsistent. Profit is in minus. Debt is kinda okay. They have minus money on the bank account. It's overvalued and the price is kinda okay. So we have actually 4 things or 4 sell flags and only 2 buy flags. So bro, nah, the company is not to buy. So bro, that's a quick evaluation. I hope you enjoyed it. Click subscribe if you want to see more about stock market videos, about stock market, about self-improvement, but I'm trying to combine both of them. Join me on my journey to become a millionaire. Do the hard work and see you on top of the world.